Hi everyone, thank you so much for joining us today for our webinar, Payroll for Nonprofits and Libraries, 2018 Law Changes That Affect You. Before we get started, I just want to go over a few housekeeping items, so all callers will be muted. If you lose your internet connection, you can reconnect using the link that was emailed to you. If you have to drop off early or if you want to watch the webinar again, it's going to be hosted on our website at TechSoup.org/community/events-webinars. And we'll also be sending an email with the presentation, the recording, and any relevant links. If you're on social media, feel free to tweet at us at TechSoup using hashtag #TSWebinars. But mostly we'll be using the chat box that you see on the left-hand side of your screen to take questions today. So just a little bit about TechSoup before we get started. We are located in 236 countries and territories. We serve over 1 million nonprofits, and we work with several technology companies to make this mission possible, like Adobe, Amazon Web Services, Intuit, Microsoft, Symantec, and today we have QuickBooks Made Easy. If you're interested in knowing what products are available to your nonprofit, you can click on the URL that you see here to see which product donations are available to you. So I'm going to go ahead and get started with the introductions. So today we have Gregg Bossen, who is the founder and CEO of QuickBooks Made Easy. So he is a practicing CPA and advanced certified QuickBooks Pro advisor with a full-service accounting firm located in Atlanta, Georgia. He's also the founder and CEO of QuickBooks Made Easy. Since 2000, Gregg has been teaching live QuickBooks seminars around the country specifically designed for nonprofits. He is considered to be a national expert in the program. And then we also have Zareen, who's going to be helping on the back end with chat. So you've probably already seen a couple chats from her. And then myself, my name is Seema Tucker, and I am the Senior Manager of Content here at TechSoup. So I'm going to go ahead and pass it off to Gregg.
Oh wow, okay. Well thank you very much, and I'm very excited to be here. So the first thing I want to do is I want to make sure everybody can hear me. So can you just chat hi or hello or anything like that? I just want to make sure that you can hear me. There we go. All right, cool. We got a ton of you. Okay. Is the sound good? Who thinks I'm too loud? Who thinks I'm too soft? Sound is great? Okay, cool. All right. Awesome. So the volume's good, everything's good, and you can hear. All right. So what we're going to do is we've got 280 people here on the call so far. And now listen, I know how webinars are, and you like to multitask during webinars. Let me tell you something. Don't do that. I've got you for about 45 minutes here, and I've got a lot of great information. I want you to be sure to pay attention. All right? So please sure to pay attention because I'm extremely interesting. Seema, are you there? Seema's going to be helping. She's going to ask me some questions. I want to make sure that I can hear you, Seema. Are you there?
Yes, I'm still here.
All right, cool. All right, cool. So this is obviously a seminar about, it's for payroll, specifically for nonprofits and libraries, and the changes in the laws that happened in 2018 that affect you. Now, to be honest with you, the main law, there was only really one law that changed, and then there's some other guidance. And the other thing I wanted to say is that, you know, if I'm going to teach you what the changes are in the law, kind of need to know what the law was before, you know, to give you a context to understand the change. I'm not going to presume you know everything about payroll. And so we're going to be learning a lot about payroll. You know, when I get to a particular change, I'm going to talk about what things are like now or what they have been and then what the change is so you can better understand it. So I think it's kind of cool. Let's see. And before we go any further, I have a poll. So this helps me to make sure everybody's listening to me because I'm a very insecure person. I want to make sure everybody's listening to me. So I want every single person to answer this. What do you use to run payroll? ADP, Gusto, Paychex, Paycor. That O is for other. QuickBooks Desktop Payroll, QuickBooks Online Payroll, my bank, my accountant, or if you're completely crazy, you're doing it manually. So please go ahead and fill that out. We've got 174 answers out of 296, so I am not playing. I want everybody to answer. Kama, Karen, there's two Karens, Laura, Leslie, Mary, Matt. I want everybody to listen, everybody to respond. All right, so let's go ahead and show the poll. We got almost everybody. Go ahead and see. So are the results. I guess I can do that myself, can't I? I don't know if I can. Okay. So it looks like the majority of you, 28%, are using QuickBooks Desktop Payroll. Next after that is IOI, and then after that is ADP. Doesn't surprise me at all. And what's kind of cool about this is that we have a training product that teaches you how to use the QuickBooks Desktop Payroll, and there is also a TechSoup offering for ADP at discounted prices. So those of you that are interested will look at that in a little bit. All right, so let's move on here. Oh, this is a nice little picture of me. Again, I'm a CPA. If you weren't listening before, I'm a CPA, have a practice in Atlanta, Georgia, been in practice for years, specialize in nonprofits. I also own QuickBooks Made Easy, and what QuickBooks Made Easy does is we teach people that are in the nonprofit world how to use QuickBooks. And we do it in 3 ways. We have training DVDs, we have an annual tech support agreement where you can call with questions, and then we do live seminars and webinars as well. So we're going to have a little bit of a discount here, actually a big discount on a couple of products, but we'll worry about that later. Let's get into this. All right. So this is a class about new laws and regulations, and so basically these are the 3 new things that happened. Now the big one, and let me see if I can get my little pointer here. Hopefully, yeah, there we go. So the big one is the new law. There's only really one new law that we're going to talk about. It's the Tax Cuts and Jobs Act of 2017. Unless you've been under a rock, you probably heard about this. Donald Trump signed it into law December 22nd. This is a giant tax cut that you've heard about. It started as of 1/1/18, so it's going to affect everybody's 2018 stuff. But the thing about it is there's a lot of stuff in there. Some of it's not so great for nonprofits in particular, and some of it is just stuff that you need to know. So we're going to talk about that. And then there's 2 other little things here. This U.S. Department of Labor Field Assistance Bulletin. Can you get any more boring than that? Good old number 2018-4. But anyway, it was released in July of 2013, and it actually helps give guidance as to when somebody's an independent contractor or not. So it's for a particular industry, but you can extrapolate it. And then finally, the Fair Labor Standards Act, that covers, amongst other things, when somebody gets overtime. And there's a change that's coming, a pretty big one, possibly, in March of 2019. So those are the laws, but who cares about the law? We want to find out what we're really going to talk about. So this is what we're going to talk about. We're going to start with employee and independent contractor because that's always a question that you have. And I kind of did this in the order. So it's kind of like, well, I hired somebody, should they be an independent contractor or an employee? Then we're going to go over minimum wage, when to pay overtime. We're going to look at change in the withholding tables. We're going to look at the Affordable Care Act and what changed there. This fringe benefits is probably the biggest thing that you need to really think about in terms of change. Basically, these are fringes that you used to be able to give to your employees tax-free. It's not that way for some of these things, and there's actually something that's pretty serious that affects nonprofits. And then we're going to end with the Family Medical and Leave Act. So that's kind of what we're going to cover. I do want you to answer questions or ask questions as we go through. We've got Debbie Kilsheimer on the back end, and she is with Behind the Scenes Accounting, and she is an amazing trainer. She trains with me, and she will be able to answer any questions that you have. We also have Laura West from ADP who will be signing in momentarily. So are you guys ready to rock? Because I want you to listen to everything. So somebody tell me to get going, and then I'll move. Who wants to hear about independent contractors? All right, Aaron says go. Here we go. See, you got to pay attention with me. All right, so independent contractors versus employees. First thing I want to say is that when you hire somebody, you don't know whether they're an independent contractor or an employee. Now, first thing I want to say is that employers do not pay payroll taxes on independent contractors. So there's a benefit to you as an employer if you can make your staff independent contractors versus employee, because you don't have to pay the payroll taxes. And I have a little chart here that kind of shows you this. And you can see here there's a column for employee and a column for independent contractor. So you got the same person makes $10,000 as an employee, makes $10,000 as an independent contractor. As an employee, you, the employer, have to match their Social Security that they have to pay, which is 7.65%. You have to match it with your own 7.65%. So it costs you $765 extra if they're an employee. Federal unemployment, most of you don't have to pay that, but if you did, it's $42. And then state unemployment, and you have to pay that too on employees, and it varies. I did it for Georgia. For $10,000, the average is around $256. So as you can see, the total amount of money that it would cost you is at $11,063 versus just the flat $10,000 if they're an independent contractor. So that costs you an extra $1,000 for every $10,000 you pay the person. So that can add up. So again, it's better to be an independent contractor. So now let's talk about how you would decide whether or not the person is an independent contractor. Well, before we talk about what the right way is of determining it, let's talk about what the wrong way is. Okay, I want to dispel myths that are out there about when you can make somebody an independent contractor. This one I like, starting employee trial period. This is the one where you say, well, I'm hiring somebody, but I don't know that I'm really going to hire them, so they'll be under a trial period for 6 months. And since it's a trial period, well, I'll just make them an independent contractor. No, you can't do that, okay? It's the moment you hire somebody, if they're supposed to be an employee, they need to be an employee immediately. So that's not going to be a reason to make somebody an independent contractor. Few hours worked, or you only hired them for a brief period of time. Let me tell you something. They only work 2 hours a year. Doesn't matter. They still may be an employee. And they're only hired for a day. Doesn't matter. You go to work for a big company, you work for 4 hours and then they fire you, you're getting a W-2. All right? So these two things don't mean you can be an independent contractor. Finally, you tell the person up front and they agree. So in other words, you and the person agree that they're going to be an independent contractor. Does that mean they're for sure an independent contractor? No, it doesn't. I've had clients where at the end of the year, the independent contractor said, you know what, I should have been an employee because things turned out differently. They call the IRS and you're in trouble. Okay? So the point here is none of this matters. Okay? So now that we've talked about what doesn't matter, let me talk to you about what does matter. Okay? So when it comes to whether or not a person is an independent contractor or an employee, what it determines it depends upon whether or not you're talking about the federal level or the state level. Okay, so listen very carefully here. Martin, I'm talking to you. Listen, for federal purposes, it's who has control. The more the employer has control, the more they are supposed to be an employee, the more that the independent contractor has control, the more the worker has control, then they're an independent contractor. So I'm going to get into this more in a second, but let's just say your toilet clogs and you hire a repair person to come out to your office. Well, you don't control anything about how they do their job. You don't really control when they come. You know they're always late. And you don't really control the cost too much. So you don't have control. They do. They're obviously an independent contractor. Whereas an employee that has to show up from 9 to 5, well, you have control. Okay? But it's not so cut and dried. So we'll get a little bit more into that in a minute. But that's for federal purposes. Now for state purposes, they use control, but the various states have more things that determine whether you're an employee than just control. So what I want you to get from this slide is you could possibly have somebody who is an independent contractor for federal purposes, but when it comes to state unemployment, paying state unemployment, it may be that they're an employee. All right? So what that means is if you are an independent contractor for federal purposes, then you just give the person a 1099. You don't withhold. You don't have W-2s. Give them a 1099. But those same people may be employees for state unemployment purposes only, and then you'd have to file unemployment on them. All right. So let's move on. So the feds. So I said I wanted to get a little bit more into when you would determine whether they're an independent contractor or an employee, how you would determine that. Again, it has to do with who has control. Now the IRS has all kinds of publications and stuff. Here's a publication 15A. There's a 20-point checklist. And actually I have a link here that you can click on it. There is a Form SS8 that you can actually fill out, or your employee can fill it out, or your would-be an employee. Send it to the IRS, and then they will decide whether or not they think the person is an independent contractor or an employee. But the whole deal is who has control. So what I'm going to do is I'm going to share my screen real quick. All right, and here is this SS8. All right, so hopefully everybody can see it. I think if I can move this thing. No, I cannot move this thing. All right, so here's the SS8. I'm going to assume that you can see it. And determination of worker status purposes. It's a form, and you could fill it out and give it to the IRS. I would suggest you fill it out for anybody that you want to be an independent contractor, but this kind of helps you understand about this control thing. So in order to be an independent contractor, they have to have what's called behavioral control. They have to have financial control, and then they have to have the appropriate relationship. And so these are the three areas. And then there's all these questions, and the questions have to do with control. Like look at this first one. What specific training and or instruction is the worker given by the firm? Well, if you want somebody to be an independent contractor, you really shouldn't be giving them any training or instruction. They should know how to do it themselves. So the answer here should be something like none. Okay? And I'll just do one or two more other things that are here. Let's see. Here, describe the worker's daily routine, such as his or her schedule or hours. If you want the person to be an independent contractor, this answer needs to be, well, they can do whenever they want to. They don't have any specific hours. Okay? When you go to financial control, list the supplies, equipment, and materials and property provided by each party. So an independent contractor, the worker would be supplying most of it, whereas if it's an employee, the firm would supply most of it. Relationship of the worker and the firm. Are you offering paid vacation and sick pay and paid holidays? That sounds like an employee. But see, there's tons of these things, and it's not black or white. You're supposed to kind of look at it in its totality and then decide whether or not you think the person can be an independent contractor. All right? So I'm going to stop sharing, and I'm going to go to, there we go. So my advice is each person that you think might be an independent contractor, and I'm not talking about the repairman who comes in to fix the toilet. I'm talking about that person you hire to do grant writing or whatever. Complete the SS8 with them or without them, but complete it. Don't send it in though, okay? We don't want to involve the IRS, okay? We just want to have it so that we have something to hang our hat on if there's a problem later. And have them sign a contract saying that they are an independent contractor. Now, again, that doesn't mean that automatically they're an independent contractor, and that's not why I want you to do that. Why I want you to do that is because, to be honest with you, the IRS doesn't care so much as long as they get their money. And if they're an independent contractor, you give them a 1099, they pay their own taxes. So you're probably not going to get the IRS giving you a hard time about anybody. What happens is you get a disgruntled independent contractor who then calls the IRS and says, I should have been an employee, and I've seen this happen. Okay? So you want to make sure that they sign a contract just so that you set the expectation and you lessen the chance you're going to have a problem with them later on. And make sure that they understand that they're going to have to pay their own taxes, because that's usually when the problem happens. They don't really know what they're doing. Then at the end of the year you give them a 1099 and they realize they owe all this money, and then all of a sudden they try and say, oh, I should have been an employee and you should have been withholding. Okay? So we don't want that. All right, so I think that is it. Is that it? That's for Fed purposes. I'll stop and see if anybody has a question that needs to be answered. Let's see. Does anybody have a question that needs to be answered, or can I just move on? It's always nice to hear your voice, Seema. Are you there?
I'm here. All right, we have a few questions, so let's see.
I'll do a couple and then I'll move on.
Okay, so if you have several contractors, do you need an SS8 on each?
Yes, the SS8 is for an individual person. You'd fill out a form for each one of those. And I'll take one more question.
Okay, and then how do we know a contractor is paying taxes?
You don't care whether or not they're paying taxes. They're just supposed to pay taxes, and you want them to know that they're supposed to. But it's not your responsibility to know whether or not they're paying. What I mean, make sure they know that they are supposed to pay taxes is what this means, okay? My bad.
Okay. We have another good, can I ask one more question?
Yes.
We are a private school. Teachers we hire as employees. Can subs be independent contractors?
Teachers we hire as employees, and what was the last part?
And then can substitute teachers be independent contractors?
Okay, well, I'm going to tell you probably not. It depends upon the state, but actually I've got something that's going to cover that. Because when it comes to the feds, yeah, I don't know that they could be an independent contractor because you're kind of controlling what they do when they're there to a certain extent. But the thing that you have to remember is in addition to the feds, and this is almost more important, you need to see what the state says. Okay? So the state, they have their own rules. So again, you could be an independent contractor for federal purposes, but for state purposes you might have to pay unemployment on them as if they were an employee. So in order to find this out, the state departments of labor, that's what DOL, they have their own rules, but 23 states have a three-pronged test that's known in the world as the ABC test or in the United States. And basically what it means is that in order for somebody to be considered an independent contractor, you have to be able to answer yes to all three of these things. One of them is the worker has the control. The worker's free from employer control, and you can use the federal guidance for that. That's really all there is for federal purposes, but for state purposes, look what the three-pronged test does. The person also has to have a business that does this work, okay? So I don't know about the substitute teachers having that. Okay? And then finally, the work is outside the usual course of business. Okay? And if substitute teachers, that's not really outside. Your business is teaching. So my guess is they have to be employees for state purposes. All right? So let's move on. And I'm going to test you now, okay? So I want you to chat the answer, all right? So look at scenario 1. You hire Jane. She writes grants for you. She only does this for you, and you supervise her, okay? So you have the control. Your organization is a counseling center. What is she, an employee or an independent contractor? Type your answer. Employee or independent contractor, what do you think? This is pretty easy. Yeah, employee. You're right. Okay? Excellent. Now let's look at the same scenario, but instead, let me not do that. Same scenario, you hire Cheryl, though, instead to write grants for you. She does provide the service to others. Then what is she? Go ahead and type the answer. Yeah, what is she now? You're still saying, scenario 2 is independent. Notice how, let me click this here, independent contractor. Because she provides the service to others and you don't exercise any control, then therefore she passes the tests, she's an independent contractor. Okay? So do you see the difference here? Here, she only does it for you and you supervise her. Here, she has her business. She does it for other people. Okay? Look at the 3 tests. We'll go back to the 3 tests because I want to make sure that you get this. This is pretty important. The worker has the control. The worker has a business, okay? And the work is outside the usual course of business. If you look at scenario 2, you can see she has her own business, and she's writing grants, and that's outside of the normal work of the counseling center, which is providing counseling. Okay? So I'm going to give you one more, and then we'll move on. And this one is a hard one. All right. Scenario 3. You hire Jane. It's a different Jane. to counsel your clients at your office. Okay? She provides this service to others. Okay? So she has her own business. Okay? She exercises control. Your organization is a counseling center, and she's doing counseling. What do you think? Independent contractor or employee? Y'all give me an answer. So Kelly says contractor. David says employee. Any more people want to guess? So it looks like it's going back and forth here. Let me show you something. I'm going to go back to the test so you can see the tests. Okay? Worker has control. Worker has a business that does this work. Both of those are true. Okay? So maybe she can be an independent contractor. But the work is outside the usual course of business. Okay? The work that she's doing in scenario 3 is providing counseling. That's inside the course of business. So therefore, she fails that third test, and she has to be an employee. So she's an employee. Okay? So I know it gets a little bit confusing, and that's what you have the slides for. But I think I'm going to move on from there unless somebody has another question. That was kind of the longest thing we're going to cover. Let's see. But what if she has some sort of specialty counsel ability? Can you elaborate on the third point? Let me just try this again. Okay. If you look at the third point, I'm going to do this one more time. In order to be an independent contractor, the work the person's doing has to be outside the usual course of business. Okay? So in our first example, she writes grants for a counseling center. Counseling centers aren't in the business of writing grants. You write grants, that's outside the normal course of business. It's outside the mission of the organization. It helps it, but it's not what the organization's purpose is. In scenario 3, though, we do counseling. That is the normal course of business. So if you got somebody, even if they have their own business, if they're doing the thing that they're doing the thing that you do as a nonprofit, then in some states, you have to check the state, they're not going to be able to be an independent contractor. They got to be an employee. Okay? All right. Okay, so there we go. I think I'm going to move on because we've only got a half hour left, and I've got a bunch of other stuff I want to cover. All right, so let's do minimum wage. So that's a little bit easier. So minimum wage, now the feds have something to say about it, and so do the states. All right? The feds have a baseline, $7.25. Okay? There are 30 states that have rates higher than that. So no state can have a rate lower than $7.25, but there's 30 states that have a rate higher than that, going from $7.50 all the way to $14. And let me give you a little poll here. Who do you think has the highest minimum wage next year in 2019? I want everybody to answer. Marilyn, I want you to answer. Mariana, Crystal, Cynthia, everybody answer. Massachusetts, California, New York, Hawaii, District of Columbia, or Puerto Rico? Who has the highest? Who has the highest? Okay, in the interest of time, publish the results. Oh, I can do it myself. This is all very exciting. All right, so 51% of you guessed California. And then New York was next in line. It turns out that the real answer, are you ready for this? The lowest one here, the District of Columbia. The District of Columbia has the highest minimum wage. It's $14. Now there's a little, I had a little, in the slide here, I had a little link where you can go to see what the wages are by state. And I'll just share my screen and I'll click it so that you can see this. So this tells you what the rates are. And you can see here the District of Columbia, $14. And this is interesting. Puerto Rico, I guess Puerto Rico doesn't have to do what the Fed does because it's not really a state. So their minimum wage is only $6.55. So anyway, enough of that. All right, let me move on here. I'll take some questions in a second. When do you pay overtime? Okay, so you know what the rate is. When do you pay it? Well, again, the state may have different rules than the feds, but basically you pay overtime to non-exempt employees. Non-exempt employees. Now, what the heck is a non-exempt employee, and who is non-exempt? Well, let me tell you what. There's two categories of employees. There's exempt and non-exempt, okay? And everyone is non-exempt, okay? So everyone gets overtime with the exception of outside salespeople, doesn't apply to you. Airline employees, doesn't apply to you. And those who pass the following three tests, okay? So if you say yes to all three of these, then the person doesn't get overtime, okay? And obviously, as an employer, you usually don't want to pay overtime, but we're nonprofits. We care about our employees. But anyway, so if we say yes to all these, they don't get overtime because they are exempt. First of all, they get a salary, okay? So salaried people may, not always, but they don't usually get overtime unless, okay, there's more rules. Just because you're on salary doesn't mean you don't get overtime, okay? Additionally, the salary has to be at least $23,660 a year. So let me talk about this real quick. This is a little confusing. It always confuses me. Now think about this. If you're an employee and you're making $23,000 even a year, then you should probably be getting overtime. You're not making much money. But if you make over $23,660, they say, oh, you make too much money, you really shouldn't get overtime. Well, obviously $23,000 is not very high. And there were a lot of like restaurant workers that were getting a salary of like 30 but working 70 hours a week and not getting overtime. And so a couple of years ago, Obama tried to increase this to $47,476. What a weird number. And if he was able to do that, that means more people would be able to get overtime, okay? Because more people would there's 4 million more, I think, that would have been affected. They want to raise this to effectively give more people overtime. It got stopped, not by the Republicans, it got stopped by the courts, and then the Department of Labor was fighting it, and then there was this little election that happened in 2016. And when that happened, this person got into office, Donald Trump. I don't know if you heard about it, but anyway, so they immediately said, you know what, we're more about the businesses, so we really don't want to make people pay overtime that are employers, and so we're going to stop fighting for this, and they stopped. But the person who's at the DOL now, I think it's Acosta, is saying that he is going to raise this, but not by much. And he was supposed to raise it last month or something. They keep delaying when they're going to raise it. Now they're saying in March of 2019 they're going to raise it. So this is the change that might happen. This rate may go up a little bit. Okay? So that's it for that. But that's not enough. See, in order to be exempt and not get overtime, you have to be paid on a salary, has to be at least $23,660 at this point, but also you have to perform certain job duties in order to not get overtime. You have to either be an executive, a professional, or an admin. Okay, executive, professional, and it's some admin. It's usually admin. An executive means you supervise 2 or more others. You have input into their job status. In other words, you can say whether they get hired, fired, raises, whatever. And then you're primarily a manager. That's an executive, okay? If you're not an executive, you still might be exempt from overtime if you're a professional. A professional means that your job requires advanced education, like doctor, lawyer, or accountant. Skilled trades don't count. Okay? It sounds like they're hurting people that have skilled trades, but think about it. If you're an electrician, you do go to school, but it doesn't count here. What does that mean? It means somebody who's an electrician, they aren't considered a professional, therefore they're not exempt from overtime, therefore they get overtime. See, they're trying to get skilled laborers. Those are the people that usually get a tough break. They want them to be able to get overtime. Okay? Now, if you're not a professional, if your job doesn't require advanced education, the other people that are considered professional are people that are creative or talented or positions that are like that, like writers, actors, or musicians. Okay? So I'm just going to go back real quick just so you can see, because I'm about to test you again. Let's go back here. So what are the 3 tests? If you get all 3, there's no overtime. Salary, over $23,000, and either you're executive, professional, or admin. Okay? So let's do a little test here. So this is a poll, which I don't think we set up as a poll. I forgot about that, but that's okay. So you can just type the answer. Which employee gets overtime? Now, all of them make a salary of $30,000, okay? So it's yes to both of those answers. But which of these employees are not really considered professionals and therefore can get overtime? You're right, the set builder. Y'all got it. Good for you. All right. The admin person is a bookkeeper, and admin people will still get overtime provided what they're doing is, I'll just leave it at fairly important. Okay? Let's see. I see one question here. Chelsea, we have 3 employees that raise their own support through donations. Those donations are under the nonprofit, but for the purpose of self-raising support. Does overtime apply to them? It has to do with what their job is and whether they're salaried or not. It doesn't have to do with the fact that they raise their own support. So you got to look at the 3 questions to decide whether or not they get overtime. And then, okay, so if somebody does get overtime, when do they get it? Well, again, the feds have a baseline rule if you work more than 40 hours in a week. Now, what is a week? A week is 7 consecutive days and can begin begin at any day at any time. Doesn't have to be a Monday, doesn't have to be a Wednesday. It could be Thursday afternoon at 4:39. Is that you just decide when your week starts, and then it's 7 days. You add it up. If it's more than 40 hours, they're getting overtime. And those days include weekends and holidays. It's just 7 consecutive days. Okay? And that's how it is for almost everybody. Okay? Now, there are some states that are a little bit stricter than that. A big one I can think of is California. And there's a little link here, and I'll just go to it. I'm going to share my screen again so I can go to it. There we go. And what this does is this little link is going to give you every single state, and it's also going for each state it's going to tell you. So if you look at California, California requires a minimum wage of 11. See, they're higher, but also it's any time over 8 hours in a day. See, usually for most states it's 40 hours in a week, but not California. It's 8 hours in a day. You work 24 hours, and then in one day you take the rest of the week off. Doesn't matter. You're getting overtime. Okay? So that's the dealio with that. And let me stop the sharing here. I can't stop the sharing. All right, that's a little bit weird. Okay. Am I still sharing or no? Seema, I can't tell what happened.
Yeah. No, we can see the slides now, so you stopped sharing.
Okay, yay. Okay, somebody must have done that for me. All right. So the other thing about overtime is, what is it that they're supposed to be paid? It's 1.5 times earnings. Okay? It's not double time. The only time it's really double time is California has some rules about double time. The other states don't. Some unions do, or you just decide to pay double time. Okay? So in the interest of, well, you know what? Let me do one more question. I'll do one more question. Does anyone have a question here before I move on? Seema, do you see anything, any burning question about the overtime?
Let's see.
I don't think so.
I don't see anything, no. I think we're good.
Okay. Okay. So here we go. All right. So I'm going to move on. Let's see. So this one's funny. So listen up. This is going to be very important, but it's real quick. The tax laws changed, okay? All kinds of things changed, all right? And I'm not here to teach you about all those changes. That's a different seminar. But the rates changed. The standard deduction doubled. For married filing joint, it went from $12,700 to $24,000. The personal exemption's gone. The child tax credit doubled. All kinds of changes happened, all right? As a result, they had to change the withholding tables. Listen, they didn't have time to do a good job changing the withholding tables. So the withholding tables, they came out, because remember, the law happened like 8 days before 2018, and everything started 1/1 of 18. They didn't have time to do a good job on the tables. It was very complicated. So instead of doing a good job, they did a bad job, okay? So what that means is that a number of your employees, and it's not your fault, will be under withheld. Now the IRS knows this, so they have this little website, and if you go to irs.gov, there's the link. They answer a few questions. This is something your employees should do, and it'll tell them whether they're under withheld. It won't be perfect, but it'll be better than the withholding tables. So I guess what I want you to do is I want you to tell your employees, hey, you may end up owing taxes this year or getting a smaller refund because the tables were messed up, and it's not our fault. It's the IRS tables, and I just want you to know, and here's the website you can go to. That way they won't be yelling at you later on. All right? So let's see. What's next? The Affordable Hair Act, the Affordable Health Care Act, the Affordable Care Act, or Obamacare. Now, this is not really something that affects most of you because you have to have more than 50 full-time equivalent employees before you have to basically provide health care. And that's a lot of what the Act is about. It makes employers, at least the employer part, it makes the employers provide health care if you have more than 50 full-time equivalent employees. Now notice it doesn't say 50 full-time employees, it says full-time equivalent, okay? For the purposes of defining this, full-time is 30 hours or more a week. Not 40, but 30. And it's the full-time equivalent, which means if you have 2 half-time employees, like 2 employees that work 15 hours a week, that equals 1 full-time employee. So you can do all your full-times and you add your half-times together. It's actually a very messy calculation, and you can go to this link in order to calculate it. But I'm curious, is there anybody here who has more than 50, they think they have more than 50 full-time employees? Chat it up. I'm just curious to see how many people do. I would be surprised if very many people do. Okay, so I've gotten, out of 315 people, I have 1 person with yes. 2. Now we got 2. So it's not that big of a deal. So this usually doesn't apply to people. However, those of you, oh, there's 4 more. So if you do, even if this doesn't apply to you though, you could still decide, because you're nice, to provide health care. And I do want you to know, and this isn't a change, but if you provide health care for your employees, you do have to send a form in, that Form 1095, that you give to the employee and you send to the IRS reporting what you paid for health insurance for them. And you also have to put that information on their W-2, Box 12, Code DD. Okay? So this is not a change. What is a change is something that you don't really have to worry about, but hey, let's teach you anyway. The only change is employees who don't get health insurance on their own. These are people that you don't cover and they don't cover themselves. They are, even through 18, this year, they have to pay a penalty, okay? And what they did is, beginning in 2019, that penalty is reduced to 0, okay? So that's kind of a change. Doesn't affect you, but it's just something to know. Make you sound smart at parties. Now, let me tell you something. I'm going to be honest with you. I do 260 tax returns a year. Nobody was doing this penalty anyway, okay? And if they weren't, the IRS wasn't catching them because the IRS doesn't have any money to do it. So I don't know that there's going to be much of a change here, but notice how they didn't remove the penalty. They simply reduced the dollar amount of the penalty to 0. That way, there's still a penalty. The penalty is just 0. And I know they did this so that they could put the penalty back in case they happen to be able to, they want to put it back again. But anyway, so that's the Affordable Care Act. Let's move on. Now, the rest of what we're going to talk about is fringe stuff, and this is really important, okay? Moving expenses. If you hire an employee and they're in another state and you move them to where you are because you're nice, you used to be able to move them and it wouldn't be taxable to the employee. Now in 2018 it is. This costs thousands. So basically, if you decide to pay for somebody's moving expenses, It's got to be added to your W-2 in 2018. That's a big deal. And if the employee pays their own moving expenses, they used to be able to deduct it. They can't deduct it anymore. Okay? That's an aside. Okay? So basically, moving expenses are no longer deductible. If you pay for it, it has to be added to their wages. If you don't pay for it and they do it, they can't deduct it. Got it? Moving on. All right. So now, fringe. So this is interesting, and I wish I could. I think I can. I don't know. No, I don't think I can zoom in on this. I want to zoom in on this, but I can't. So I want you to take these separately. So I know this is kind of small, but take this separately. So fringe benefits that you might pay for your employees. Entertainment. What we're talking about is tickets to shows, club memberships, maybe gym memberships. Used to be able to write those off on your taxes. Now you can't. So businesses can't write this off, but it doesn't really matter to you because you're a nonprofit. You don't pay taxes. You don't have to add it to wages. Okay? Same with non-travel meals. Now, I'm not talking about travel meals when your staff goes away. I'm talking about when you buy meals, like you want to keep people working in the office or they're working late, so you get pizza or sandwiches for everybody and you bring it in. Those things, normally meals are only deducted at 50%, but you used to be able to deduct these kind of in-house meals at 100%. Now they're only deductible 50%. Again, it doesn't matter to a nonprofit. That's only for for-profits. And again, it doesn't have to be added to their W-2. So these two things right here are actually irrelevant for nonprofits. They used to be deductible. Now they're not. Who cares? You still don't add them to the W-2, and you're a nonprofit, so you don't need to worry about it. If anybody does this last one, bicycle commuting, now this is something that some people do. There's always been, or not always, but for the past few years, there's been this little benefit where if you, like in Portland, I don't know if anybody's here from Portland, but people bicycle everywhere in Portland. And there's a benefit where you can pay an employee, instead of salary, $20 per month tax-free if they bike. Okay, it's kind of like a little biking benefit. That is gone now, okay? And so if you decide to give them that $20, it has to be added to wages, okay? Look, Mary knows. She says even in the rain. I know you guys, it's amazing the way you bike everywhere. It's just really cool. Nicole wants to know to get a script from a chat. You know, I think you should fly here to Atlanta and just sit next to me and listen to me talk. It would be very, very interesting. But anyway, so that's the deal with entertainment, meals, and bikes, okay? Not a big deal here. The only thing that matters for you is that if you were paying the $20, it's gone. Next fringe, this is a bit more important, transportation assistance. So these are fringes, qualified van pools. There are companies out there that will give your employees rides to the office. You can also have your employees get a ride using an Uber pool. And if they do this, you can actually pay for that stuff. It's called a van pool or a commuter pool. And it used to be deductible, and it's no longer deductible. Same with transit passes, like you give them train or bus fare, something like that. And this is commuting. We're just talking about commuting. I'm sorry. We're not talking about transportation when they're out of town or something. That's absolutely not a problem. We're talking about commuting. So for these two, if you do provide this to your employees, you used to be able to deduct it. You no longer can. Who cares, right? You're a nonprofit. Doesn't matter. But I do want you to know that you don't have to put it to their wages. You don't have to add it to the wages unless you pay over $260 a month for both of these things added together, van pools and transit passes. Okay? The other sort of transportation assistance is parking. And you used to be able to deduct parking, like if you paid parking for your employee. You can't deduct it anymore. Again, who cares? You're a nonprofit. And again, you have to add it to their wages, the amount over $260. So these fringe benefits for transportation seem quite irrelevant. Okay? There's nothing that's really changed except you can't deduct it, but who cares? Okay? But now, everybody, you need to listen. Okay? Because if you hadn't heard about this, you're going to hear about it. Okay? There is a very big deal out here. All right. So when it comes to transportation assistance, these van pools, the transit passes, and the parking, this is very weird. As I said, it's no longer deductible. It may be added to wages if it's over $260, but unlike the other fringes that we talked about, like entertainment and food, nonprofits may have to pay tax, income tax. It's called unrelated business income tax on the amounts that they're paying for these transportation benefits. I'm going to say this again because it sounds very weird. You see, there's this unrelated business income tax thing that your nonprofit that usually doesn't pay taxes, sometimes you have to pay. It's usually on income that you earn that's unrelated to your organization's activities. But this is really weird. They went in when they did this new law at the end of 2017 and specifically said nonprofits, if they give this stuff to their employees, van pools, transit passes, parking assistance, they are going to have to pay tax on it. Yes, you're paying tax on money that you paid out. It's crazy. Here's an example. If you paid a parking pass for 4 employees, $50 a month, that's $2,400 a year. Transit pass, $34.56 a year. Total fringe that you would have to pay as a nonprofit tax on, $58.56. The tax is 21%. You'd have to pay $1,230 in tax. Now, isn't that crazy that you would have to pay tax on money that you give out as fringe? Why did they do this? Well, it gets crazier, all right? Particularly with the parking one. Because, first of all, everyone parks, unless you don't have a car. But here's the thing. You might say, oh, well, I'm not worried about this because my parking's free. Guess what? According to the law, no parking is free. If you have an office and the parking is included really in the rent because there's free parking out front, you're supposed to impute the value of what the parking would be had you paid for it and then pay tax on it at 21%. Isn't that crazy? The American Institute of Certified Public Accountants thinks it's crazy. The National Council of Nonprofits thinks it's crazy. And believe it or not, even some Republicans like Ted Cruz think it's crazy, and Democrats as well. I'm not trying to be political in one way or the other. But the point is that there's a bill now to basically make this problem go away. So even though this is true for this year, 2018, my solution is not to worry about it because it'll be fixed. The reason why I'm telling you about this is because you're going to hear people talking about it. And now you can be smart at a party and say, we're not going to have to pay this tax. Gregg says they're going to fix it. I know, Sarah, it's absurd. Exactly. Do you have a link to this parking law? Yeah, I'll show you something at the end. All right. So we've got a few minutes left. Hey, Seema, is it okay if we go over like 5 minutes? We only got a couple things.
Just 5 minutes, yeah. If
I'm going to do it really quick. Family Medical Leave Act, and I think this is the last one. This is, again, only applicable to like 5 of you. If you have more than 50 full-time equivalent employees, you have to provide at least or up to 12 weeks of medical leave. Now, the leave can be uncompensated, and that's been around for a while. Here's what changed. In 2018-19, if you choose to compensate people that you give leave to and you give them at least 50% of what they'd normally make, you can get a tax credit of between 12 and 25%. All right? So that's just something that I wanted you to understand. And I'm trying to think if there's anything else. No, there's not anything else. So let's stop and take a couple of questions, and then we'll finish up. Go for it. If anybody, Seema, if you want to just ask me. 50% in what time frame? Well, it's just 50% of whatever their salary would be during the time that they're off, I would assume. Is there any questions for me, Seema?
I am waiting for them. I think you addressed most of them, so I think we're good.
Okay. Yeah, the time did really fly. Now, Mary, I want everybody to pay attention to this. So if you use the desktop version of QuickBooks Payroll, QuickBooks Made Easy has a payroll product that's normally $300. For the next 48 hours, it's going to be $99. And it's a 4.5-hour training. It's on DVD. It's also streamable, and it comes with a handbook. It's the only training out there for the QuickBooks Desktop Payroll, and it teaches you everything, soup to nuts, about payroll. You have to go to QuickBooksMadeEasy.com, and to get the discount, you have to put this PAYR99. Okay? Also, if you are interested in getting tech support from us, 1 year of tech support is normally $4.99. For the next 48 hours, this is our last sale of the year, it's $2.39. You can call 24 hours a day, 7 days a week. Instead of calling anybody else for your QuickBooks problems, assuming you use QuickBooks, you can call us. We're open at nights, on the weekends. We can even dial in, all right, and take over your computer. Okay? To do this, you go to the QuickBooks Made Easy website. And the other thing that I want to do is I want to show you a TechSoup offering. Well, first I'll just show you where you go to QuickBooksMadeEasy.com. Right here. So you would go to QuickBooksMadeEasy.com, and if you want the products, you'd go over here to Training and push Payroll, and then you can find out about the training product. Or tech support, you can go here. All right? Now, if you are using ADP or any outside payroll service, if you go to TechSoup, click ADP, if you click ADP, you're going to, in the search engine, you're going to get ADP Payroll for Nonprofits. You'll get access to discounted rates. So, and the reason why I'm pointing this out now, it's a $50 admin fee to TechSoup. And then once you're here, you get access to discounted rates. It's only good if you have 49 or fewer employees, and it's 60% off the regular subscription rate. All right? Basically, it's $36 per payroll. Okay? There's no other fees besides the dollar per check. There's no year-end fees. There's a little $25 setup fee. So a reason why I'm pointing this out now is because if you're going to change payroll companies, and I guarantee you're not going to find anything cheaper than this, the time to do it is at the beginning of the year. So if you're interested, here's where it is. You can click Log In and sign up for it. So I think that's it. So Seema, I'm going to let you take back over. And it's 3:01. We've done pretty good.
Yes. Thank you, Gregg.
You are welcome.
Okay. So thank you guys for attending today's webinar. We have a post-event survey, so once you guys log off, if you can take a couple extra minutes to tell us what you thought of today's webinar, and if you have any feedback for myself or for Gregg, it's always really helpful when we're curating future content. If you're on social media, feel free to give us a follow on Facebook, Instagram, Twitter, and then we also have a blog where we post a lot of helpful tips and tricks. We have a couple webinars coming up. So we have one next week on the Microsoft portal, and then we have a TechSoup tour that's happening on January 15th. We also offer courses, so if you want a more in-depth education on things like Google Analytics or Facebook advertising, we do offer that through our TechSoup courses. And then we have a promo code for 10% off for the TechSoup course of your choice, and we'll be sending the code in the follow-up email as well. And then we also have services, which is help desk, manage IT, cloud implementation, and Office 365 support. I would like to thank you again, Gregg, for another very entertaining webinar on what is normally a dry topic. So thank you for that. Thank you.
Well, normally I'm funnier, but we only had 50 minutes. And I want to thank Debbie Kilsheimer, and I want to thank Laura West, who did show up, and she has been here answering questions the whole time. So
the staff, Gregg, is really sweet.
Yes, and thank you to everyone on the back end, Laura, Deborah, Zareen, and Daphne for answering questions. And yeah, we'll see you guys on the next webinar.